If you've been holding off waiting for housing prices to drop even further from where they already have, here's a quick heads up for you. The housing market is more than likely about to flip. In fact, those of us who are in the trenches in and out every day, we're already starting to see signs of that. And know this, historically, when interest rates start to drop, buyers start to move faster. And that leads to demand going up along with housing prices. In October, we saw a 50 basis point cut in interest rates. And in December, there is a high probability we're going to see another rate drop of at least another 0.25% and maybe even another 0.5%. And, if history's any guide, those of us who stay on the sidelines might end up losing out on some of the best buying conditions that we've seen in quite some time. And so today I'm going to break down why rate cuts have this effect on the market, what we're seeing right now in the Fraser Valley, and how you might take advantage of this opportunity to time the market. And you're going to want to stick around until the end because I'm going to share with you two strategies that could let you buy right now while you're still benefiting from tomorrow's lower rates. Now, really quick, if you're new to this channel, my name is Glen Hopkins and I create videos all about Canadian real estate, especially around my local market of Vancouver and the Fraser Valley area. So if that is something you're interested in, please be sure to go ahead and hit that subscribe button, and that way you're not going to miss out on any of my upcoming videos. Also, of course, if you would like my help with either buying or selling a home here in the greater Vancouver area, there is a link in the description box below where you can schedule a call with me. All right, so here's where we are right now. So since June, we have seen 4 rate cuts. And if they keep going down, well, history tells us that prices are more than likely going to start creeping back up. I mean, this is almost a given, and that's because lower rates, it means that people have more buying power, and that usually pushes prices higher. And we've already started to see signs of this in the Fraser Valley. Prices for the most part have been pretty flat. They've even dipped a little bit actually in the last couple of months. But as more buyers come back into the market, we're likely going to start seeing those inch up again. So if you're sitting out there on the sidelines waiting for greater price drops to occur, you might want to think twice about that plan because right now you might be in that sweet spot that so many people have been waiting for. Now, a question that I get asked quite often right now is, should I wait for the rates to continue to drop even more, or will prices start climbing if I wait too long? A lot of people are wrestling with that right now, and they're watching rates come down and they're torn. Do they wait for a bit lower of a rate, or do they jump in now before prices start creeping back up? Well, it's not an easy call, but if you're wondering that same thing, you're definitely not alone here. And in just a second, I'm going to share with you 2 strategies to help you out with this exact question. But before I do that, let's first talk a little bit about why waiting could be a little bit risky. So here's the thing about real estate. When the market starts to trend down, it usually does so fairly slowly. But when it starts climbing back up, it can shoot up really fast. And if you've ever been in a hot market, you know exactly what I mean. Things can quickly turn around. One minute you're in a buyer's market and then the next minute you're competing with multiple offers. It can be really intense. And right now as a buyer, you still have the edge. You can be very choosy, you can set your terms, and you've got a great selection of properties that you can look at. But as more buyers come back, that advantage could start to slip away. Right now it's still a buyer's market, but if rates keep dropping and prices start to inch up, it won't stay that way very long. All right, so let's dive into the 2 strategies that could let you buy now and still take advantage of the lower rates if they drop even further. And the first strategy is to go with a variable rate mortgage that gives you the option to switch to a fixed rate later on. Now, here's why this makes sense. If the Bank of Canada continues to cut rates, your variable rate mortgage would adjust along with it. So your payments could go down as well. Now, this gives you the flexibility to benefit from today's lower rates without locking in to a long-term fixed rate just yet. And here's the best part. If rates keep dropping, you automatically benefit from the lower payments. But if rates start to climb again, you have the option to lock in a fixed rate whenever you feel the time is right for you. And then this way, of course, you get the benefit of today's rates with the option to secure a fixed rate if the market actually shifts. This is kind of a best of both worlds option because you're not stuck with just one option. You've got the freedom to adopt as the market changes, almost like having a built-in safety net for whatever comes next. Now, the second strategy is to look for properties with a longer completion date. And this means that you don't have to lock in your mortgage rate until right before your closing date, which is usually about a week out. Now, by setting a completion date 3 or 4 months from now, you give yourself extra time to benefit from any further rate drops while still looking at today's prices. This strategy is great if you're ready to buy soon, but you still want some flexibility in case the rates shift. But just keep in mind that fixed rates probably are not going to drop as quickly as variable rates. Actually, the bond yields are ticking up a bit lately. We've seen fixed rates inching up as well. So even though the Bank of Canada is cutting rates to boost the economy, the fixed rates, they're more tied to those long-term bond yields and other big economic factors. The bottom line here is that you don't want to expect fixed rates to come down much more anytime soon. And the key here, of course, is that you want to act now before the market shifts. Because if rates continue dropping and more buyers start coming back, you could lose the flexibility and the negotiating power that you have right now on your side. These strategies are all about getting ahead of the market, but here's the thing, okay? You need to be ready to act. So if you haven't done so already, make sure you get pre-approved. And if you need a mortgage broker, let me know. I can connect you with one. And that way you can be ready. You can get out there, explore your options, and you're going to be prepared to pull the trigger when you find the home that you like. You seriously don't want to wait until January or the spring market, hoping that the market will give you more time, because again, when it flips, it can happen really fast. And real estate, it's always a long game. So focus less on timing it perfectly and more on holding it steady, okay? Because by holding on to a property for at least 5 years, you're setting yourself up for success no matter what happens with the short-term market changes. Basically, the longer you're in the market, the better your chances are of winning. So tell me, what do you think? Are prices about to go up as the rates keep dropping? Or do you think we're going to see a bit more of a decrease as we head into the new year? Go ahead, let me know your thoughts below in the comments. I'm really curious to hear about what you think. But remember that acting now, it's going to give you a clear advantage in a market that is still tilted towards buyers with lots of inventory to choose from. But if rates do continue to drop, competition can heat up fast. And, heck, sellers might even start setting their prices higher and bidding wars could return. And if that does happen, you're going to wish that you made a move sooner than later. So tell me, what's your next move going to be? Are you going to go ahead and buy now, or are you going to gamble and wait just a little bit longer? Whatever it is you decide to do, I want what's best for you. Of course, if you have any questions and you'd like to chat a little bit, go ahead, schedule a call with me using the link below in the description box. Otherwise, I will see you on the next video.